Today's interview is with Stefan Rust, the CEO and founder at Truflation. Truflation helps to aggregate different data sources to show live, real-time, up-to-date information around inflation. So Stefan and I talked about his decision to launch multiple businesses, not just Truflation as a DAO, how they did it exactly, what jurisdiction, how long it took, how much it costs, what the challenges were. We went into those details. We talked about inflation from a macroeconomic perspective, where we are today in the world, what he sees from looking at the data as to where we might be going in the future, and then how Truflation actually works, how they pull in their data, and what some of the emerging trends are in crypto around monetary policy. So I hope you enjoy this conversation. Here is Stefan Rust. Yeah, Stefan, I'm excited to chat with you. Why don't we just, before we kick off the conversation, I'm excited to go into so many different areas with you, but let's frame it out for what you're currently working on. You have a Labs, Laguna, and then Truflation, and a couple other things. What's sort of most important and consumes most of your attention these days?
So Truflation definitely, consumes a lot of my time. I run Laguna Labs, which is the development arm for a lot of the projects that we build out. Why did we, and we originally started off with Truflation, a trusted node to really provide income to people that were holding coins that they loved, and they deserved their rewards for helping secure the specific blockchains. That was Trusted Node. And then we were looking to build out, and everything we run, by the way, is a DAO. And so in essence, we want all of these DAOs to be standalone businesses. And then we just hire developers and are a development arm to help those build out as they need resources. And that's sort of what we do at Laguna Lab. Truflation is really the core of what we're doing and it is such we're in structural inflation right now. There's such a structural change taking place in terms of supply side changes that is going to put a lot of pressure on inflation at the moment. And so we're scaling up Truflation in terms of getting more data sources and going into additional markets. But more importantly, we want to also get more and more real time. At the moment, we're only daily. How do we get closer to a real-time calculator that really predicts what inflation is right now in the market to an accuracy that is what people experience when they go to the gas station or the grocery store?
Interesting. So I want to ask you more about inflation, but I first want to pick your brain a little bit on the structure of the DAOs. So yep. The Truflation itself will be a DAO, and then each different product you launch will be a DAO. When you launch a new product under the DAO structure, what's your checklist that you go through? Like, how do you practically get it out the door?
So we generally we set up a foundation. We choose a jurisdiction that's friendly, and depending on the product, we choose maybe a more trustworthy jurisdiction, a more costly jurisdiction, or a more legally friendly jurisdiction where a lot of corporations understand that jurisdiction. So the big jurisdictions at the moment, or have been in the past, has been Seychelles has been a really big one, but that has been tightened up a lot. And so that is a bit more difficult to launch a foundation in the Seychelles. Panama, Switzerland, Liechtenstein, and ultimately the cost rises wherever you go associated with these. Most of them BVI is another one. Most of these are offshore entities, and we've looked at mainly offshore as the source. And Panama just seems to be the one most friendly to crypto. They've been consistently supportive of crypto, and they've also, all lawyers around the world and accountants are very familiar with the Panamanian jurisdictions, which really helps from a management perspective. Once you have the foundation, you then build an entity that is licensed to then act on behalf of that foundation. As the DAO is still super early, ultimately that entity can then drop off and disappear. And that is the one that then sells on behalf of the foundation, issues the tokens, and acts on behalf of the foundation to be able to do that. And over time, it then becomes a self-sustaining foundation that then becomes at all. And maybe we did get rid of those at the end, and we don't need those once the tokens are fully in circulation and everything's up and running.
And do you have to, are you physically going to Panama? How long does it take? And what's the actual, if there's like a set legal name for this? I mean, would Panama have like a DAO on their government website, or are you kind of retrofitting some existing corporate structure?
We're retrofitting some existing corporate structure, right? So the advantage with Panama, it's very cost effective and you can get it set up in 6 days, which is very similar to a Delaware LLC. It takes you 6 days to launch a Delaware LLC, and you can do that for $500-600. It's a bit more expensive to set up in Panama. You don't need to go there in person. You have to have a representative that actually lives in the country to sit on the board, as you do in Switzerland as well. So they make sure that they have somebody accountable in the specific jurisdiction. And ultimately, you then have to find that trustworthy partner that you will be working with. I don't know if you saw what happened in the Tezos example. They set up a foundation in Switzerland. They had a representative running the foundation, and I don't think that worked out very well with the use of proceeds from the token sales. And that went in a bit of a sour direction. And so a lot of learnings came from that. It's super early, these DAO structures. We're still experimenting. I mean, we don't have years and years of history of decades and centuries of figuring out how to set up corporate structures, but we're learning really fast, and we're trying to improve each time. Have another success case or a bit of a hiccup, a challenge. How do we improve from that?
Yeah. So many people are interested in launching them too. That's why I kind of pry in to peel back the details a little bit. And so if you were to go Panama, it takes a relatively short time, a little bit more expensive than 600. You need to find someone locally. It sounds like that's the bottleneck. Is there a website you go to, or is it all word of mouth, or how would you find, and can it be the same person that runs, like, can one person, some lawyer down there that has a trustworthy reputation be on the board of countless DAOs, or how do you do it?
The latter, right? So generally you have specific people that act, I don't know the English word, but the German word would be Treuhänder, right? So they're basically trusted parties, a trusted handler on your part. And they have this as a profession. This is what they do. I mean, they're corporate secretaries, if you will, that dedicate their life, and they're on multiple such boards, right? They may be on 30, 40. How do they check that and monitor each one? It's as soon as a decision comes through that requires a board approval, they then come in and ask a lot of questions. So it doesn't require that much time from their side. And that's, how did we find out about it? I mean, in essence, word of mouth and finding a right lawyer, accountant. A lawyer basically that could help us navigate this landscape.
And then they set up is it a bank account that would initiate the start of a DAO? Say in the case of Panama, like where the foundation is ultimately a bank account that manages the control of the funds. Is that right?
I mean, if you want to set up a bank account, the entity can set up a bank account, right? We've done everything in crypto. So everything is paid for. The token purchases are all done in crypto. The settlements are all done in crypto. And the token transfers are done, through smart contracts. So we don't actually have, in some cases, you don't actually need a physical bank account.
Got it. So say in the case of Truflation, you establish the Panama entity, have the representative, get that set up for the foundation, for the DAO. And then the person, like how does key management work for the actual control of the crypto once the crypto is generated for the foundation?
So at the moment, early, I mean, we're 4 months in, right? So it's like super early. So we're still in a multi-sig wallet. We've got, and we're super early. We haven't raised that much, and we manage it out of a multi-sig wallet. Anyway, that's sort of how we do it. We've issued the tokens are now in a smart contract. So we will be handing over more and more to the DAO, where then the funds get locked up into the specific smart contracts, and ultimately the issuances of the tokens then get distributed according to the terms that investors or the first purchasers agreed upon.
Mm. And in your view, how do you view either the short-term or medium long-term benefits of having the legal structure as a DAO versus a traditional company? Because I could see Truflation, hiring developers and like selling a product and being successful taking a traditional path. What was the pros and cons and how you weighed it out?
So we've evolved. The market's changed. Terms have changed and customer bases has changed as well for us, totally unexpectedly or not unexpectedly, but just sort of surprisingly, let's put it like that. And by the way, we are a Delaware LLC Corp as well, right? So we've just set up an LLC Corp. We need a bank account. We are getting customers from the TradFi world in terms of hedge funds, family offices, private equity funds that are really interested in the inflation data that we provide. And so as they're interested in that, they don't have crypto. They don't want to pay in crypto. They want to have that in an API key. They don't care about smart contracts. They care that it's immutable. So they're interested and they like the fact that we store all the data on chain in terms of all our calculations. All of that is available for them to view. So it's verifiable and immutable. And so that's what they like. But other than that, they want to deal in normal day-to-day business. And so for us to secure that revenue, that's the model and the path that we're going down with that. Ultimately, at the time when we first launched, I was a big believer in DAO and that the DAO model and tokens would replace. And I think still over time they will, because of the efficiencies that tokens replace, the democratization that it enables, and just purely the efficiencies that tokens allow you to interact with your user base much better, or the stakeholders as they're now called, a lot better. And as that model, I still think that will evolve, and I think it'll come to fruition in the next 5 years, 6 years, as the maturity around blockchains and the security it provides, the banking and the financial services it can offer, all of that becomes more mainstream and gets adopted at a grander scale.
So in your case, would it be true to say there's a LLC that controls there's some operating agreement that controls Truflation, but then separately there's a foundation for the tokens that were raised that are the purpose of those is to grow the ecosystem. So they operate fairly autonomously from each other?
Exactly. And we've created, I'd call the LLC a consulting, and they are licensing the product. They can take that to the customers. They can build their own regressional analysis associated with the data that we provide. They can do all the interpretations, and they can handhold and meet the requirements that the TradFi customer base is looking for. All the meanwhile, the DAO has an interest in scaling up, providing more decentralization associated with the data that we have, ensuring greater uptime, accessing more data, and building out the tokenomics associated with that.
Got it. So an example, say you wanted to change the name. Say you want to change it to Falseflation, right? And so in a typical structure, the company is controlled by the CEO, which is really held accountable to the decisions of the board of directors. So if the board voted to do something and the CEO blatantly went a different direction, there's fiduciary duty. That CEO can be fired or personally held accountable. How does the power play out in DAOs? Like if somebody in the company that's licensing, as you say, through the LLC, they're licensing the product and the brand and everything, they could technically make these changes. If that were to happen, and maybe taking Truflation as an example, but I'm really interested in the broader architecture of control here. Like, could there be a collective action amongst the stakeholders to file a lawsuit, or how does hard power work? Figuring it out.
You don't file a lawsuit. You rally other token holders to vote behind a proposal, right? The ability to, each DAO has its own terms and conditions, right? How do I submit a proposal to the DAO itself, right? What's required? Do I need to stake 50% of the total token supply in order to provide one? Is it 10%? Do I need to have 50 wallets that in the 50 different wallets have to submit a proposal, and then that proposal goes to the whole community. Then the whole community can participate and approve or disapprove that vote. So, and you can see that really come to fruition in projects like MakerDAO, right? Which has now dissolved its foundation. There's nobody involved other than the token holders in that. It took them 5 years to get there. So this is a journey of slowly handing things over 5 years. But who are their token holders, right? It's now the Harvard Endowment, which is a proxy on behalf of A16Z, which was one of the first early investors. You have a bank in Spain or in France, I can't remember which one, that has a large portion of the tokens. And they're putting forward proposals, and Coinbase, by the way, is also a big token holder. They're putting forward proposals where they would like to spend $20 million of the treasury funds towards educating people how to use crypto. They want to put forward a proposal that the liquidity should go to Coinbase Pro so that Coinbase Pro can add more liquidity for DAI in their vaults, right? But only access Pro account holders, things like that, right? And so, or that, I can't remember if it's a Spanish or a European bank, let's call it. That's more central. But the European bank wanted and put forward a proposal to have, fiat assets, real world assets as the collateral, and no longer just ETH and DAI and other stable coins or other sort of cryptocurrencies as the collateral. So you can see that all of a sudden as it goes a DAO, the token holders could be somebody totally unexpected who we didn't anticipate influencing the direction of something that has become, a poster child for DAOs in crypto land.
Yeah. Ironically, it's not all that different from the current structure of the public markets. You can Elon's a good example with Elon Musk with Twitter. It's like the guy comes in, he's like, well, I'm just going to make this offer to buy all these shares. And now you have control the entity. So Harvard or some wealthy institution that just wanted to buy MakerDAO token voting rights, then all of a sudden, there's probably some scenarios that will play out in the future where we look at that and say, "Ooh, that's not the way we wanted it to go." That there's a negative externality that's happening because of some consolidation of power. Yeah. But that's the name of the game.
But that's a water goes down the mountain, right? And sort of it finds the path of least resistance, and as it goes down the mountain. And so I think, I think that's a nature for DAOs, right? We're going down a mountain. We don't know where it is. I mean, there's no sort of trenches that are laid out for the river to flow. We have to curve those out. And over time, we'll see where they go. And I don't think they will be too dissimilar to what we see in the shareholder market. The upside, though, I found, at least in the history, of crypto land, is that people have been able to participate in this and have generated and have been allowed to create a lot of wealth associated on that journey. And now there are a lot more restrictions coming in on who can invest, who can participate, largely because it's just grown so big. And, a lot of people aren't educating themselves and are just going in because of FOMO versus actually having the right tools in place, watching the right videos to get informed and find out whether this is true or a scam. It's just, 20% up. Okay, buy now, right? It's like, what is that? I don't know, but it's up 20%, right? So how do we provide them the right tools to find out where to and how to invest and participate?
Is there a particular mental model or way you consider what types of businesses should take this path? Say somebody is, starting a startup now, or maybe they're running a small startup and they're debating whether or not their business structure is appropriate to grow into DAOs, and they're weighing market timing, maybe legal complexity or unknown legal risk. Do you kind of view this as what are the most important things to weight here? Is it the business model itself? What are your top 3 or so considerations for determining whether or not a business would be good to move in a DAO direction or like typical C Corp direction?
The first question I would ask myself is, what jurisdiction are you in, right? I mean, if you're in the US at the moment, the hot thing is setting up an LLC somewhere and then selling equity into that with the rights to purchase tokens further down the road. The reason behind that is the uncertainty associated with regulatory environment, right? And so I need to develop a token model that gets legal approval, has buy-in, is confirmed as a utility, is less likely to be viewed as a security, etc. And so that's it. I think on a global scale, outside or internationally, maybe outside of China, and China, I wouldn't do anything in crypto, otherwise you'll be killed. But other than that, I think you would, the DAO is a more favorable model to set up, and you set those off generally offshore, and you choose investors cautiously. As the more US investors you have, the more governance the US can apply, even if you are offshore. And then you just need to make sure you're legally you have support to back your model and your token offering. DAO, I mean, I don't know if there's governance token, what the regulatory situation is for governance token, but governance token as a standalone are not seen very much today as a very attractive proposition right today, but that can change in 6 months' time, right? We see how quick crypto can evolve and change, but the theme du jour is definitely governance tokens are, unless there's rewards and dividends that get passed on to the governance token holders, which again, the DAO needs to propose, or somebody needs to propose, and the DAO needs to approve, and then that happens.
Yeah, it certainly seems
very
like there's
democratic solution.
Yeah, which is the inherent beauty in it.
Yeah.
It certainly seems like there is some opportunity to streamline this process. You know, the kind of the implicit sense I'm getting from you is that it's like painfully early, and people are sort of waiting on the sidelines, either to make moves in this direction. Maybe it's regulation, or it's just unclear what jurisdiction or who controls this. But I mean, I could see some platform coming out there that like streamlines this for people trying to start DAOs, which would be awesome.
I mean, you have some platforms out there, right, that really streamline it. There's like Aragon, which was one of the first that tried to really set it up and set up governance and solve disputes between token holders. So you had an arbitration, sort of a court of arbitration to solve disputes. Then there came some more centralized solutions to help out these decentralized environments. You have like snapshots, you have boardroom. There's some tools out there that allow you in the interim, before you get everything into a smart contract so that it's standalone, you have these interim solutions where you can test out the way it works. You can get people to vote, you can get people to submit. And those tools are really handy and actually have a very nice user experience.
That's awesome. Yeah, you mentioned Aragon, Boardroom, Snapshot, not Snapchat.
Snapshot, yes, exactly.
I want to shift gears a little bit and get your thoughts on the market. So I'm less interested in our current state and more interested in like how you understand the market's change. So maybe we'll start with focusing on inflation. What are the factors that you would need to take into consideration about a country or an economy to determine the ideal inflation? And I'll preface that by saying that most economists, I would say, feel that some inflation is a positive influence on the economy, like 1 to 3%, and that most people recognize extreme deflation or inflation is terrible and can be really detrimental. But what are the factors that play into like why inflation is good and how to think about it?
So, I mean, ultimately, inflation is the amount, the increase in price in a society. And a large portion of that is driven by the increased amount of capital available in a specific society, right? And it also plays out, not only that, against supply and demand, right? So the more supply in the market, and the demand stays the same, then ultimately, the price drops, and vice versa, right? The more demand, the less supply, the prices rise significantly, and that then is accounted as inflation. Yeah, and from an economic standpoint, that's simple terms of where we're at. Why is a standard amount of inflation good? I think it just shows that there's a bit, there's the demand is growing and exceeds the actual supply, which means that the wealth in a society is actually growing. People feel that there's more money out there. People want to buy. So the demand is always slightly stronger than the supply. That's what you ideally want, because that means that we can produce more. The economy is healthy. There is always demand there for what we produce. We can still innovate. And there is, again, more demand to be able to meet that new market fit with a new product, with new pricing, or it puts pressure to optimize from a manufacturing standpoint. How do I deliver more product to market? So I can hire more people to help, with the factories and et cetera, to produce more goods, to then have those delivered and put into the shelves or into warehouses where people can then go and purchase that. That is sort of the inherent fact. I think what we're seeing right now is there's been we've lived in the last 30, 40 years in a very expansive mode where we've gone global. We've built this global supply chain. And what that has done, it has allowed us to capitalize on, sort of benefits of lower cost of manufacturing in one market, whereas also exporting into other markets. So I have grander economies of scale, bringing down the unit costs of items that get produced. And we've been living in that market for the last sort of 30, 40 years, if you will. I mean, World Trade Organization and all of these bilateral agreements and the, NAFTA, we had the European Union, all of a sudden one single market. And so you've been able as a builder, as an enterprise, scale up and provide, benefit of economies of scale. So whatever you R&D, I can scale that around the world. I've got a big customer base. I can bring down the unit cost significantly. This is changing. Right, we're de-globalizing, right? And what does that mean? That means our structure and supply chains are changing significantly. I can no longer very quickly and easily produce something in China, have it shipped to the US and put on the shelves just in time for Christmas holidays where people can then purchase the products off the shelves. Those days are over. We're having structural issues. I cannot get enough energy in Europe in order to prepare for the winter. So the price of utility costs are skyrocketing 80%, in the last year. And that does not include the previous year because the lack of demand as well. So all of inflation always gets compounded as well, by the way. And so I think that we're in this structural inflation that it's going to be permanent, but not because of the demand side, but because the struggles that we have in the supply side.
And you didn't mention it, but I would assume that the pandemic in 2020, 2021 was the thing that introduced a tremendous amount of chaos and exploited the lack of resiliency. And my thought on this is like, if you boil an economy down to an individual person in a home, if you kind of weigh the scales on resiliency versus efficiency is that person, everything in their house is completely done by other people throughout the world. And so everyone's super specialized. And if you are on the other side of the spectrum, that person does everything. They grow their own food, they build their own house, everything, but they're incredibly resilient, but incredibly inefficient.
Yeah, exactly. And I think that's a good analogy. I mean, that's definitely the case. And the other thing I'd say is in that shift to that resilience, it was really a shutdown from the previous model where, and you can't just switch that back on. Once you've built your own garden, you've got your own vegetables, why should I go to the supermarket and buy, genetically modified, vertically farmed tomatoes versus my tomatoes that come from my soil that I've cultivated and grown, so you can't just turn that over right away, right? It takes a year or two. Oh, I'm getting bored. I don't have the time for that anymore. I missed the rain. It rained too much last night. So I have to actually go and buy that. And then you get used to it. It's much easier to just buy it. I don't need to work. And then I'll use that because then I can spend another 15 minutes coding, the next smart contract.
Mm. What do you feel about government intervention with things like bailouts? Certainly, in my lifetime, one of the most famous ones was in 2008 with the bank bailouts. Right. But then it just seems to have been kind of this growing economic philosophy, at least the US, that the government's intervention into private markets is often, or it is necessary and is very helpful. So that's heavily disputed, and I would really critique whether it's useful. Like, I think people in 2008 with the banking crisis would say these banks are so big we can't let them fail. Yeah. But I tend to think it's the other way around, where they're so big they had to fail. Where do you kind of line up on government's role in private markets? What's necessary? What's useful?
I mean, I think the markets should decide. I don't believe in bailouts. I believe in line of credits. I mean, if somebody has extended themselves or the market's crashed a bit more, they've had a healthy business, they haven't been misappropriating funds. I feel that a government can come in and help give them a line of credit and sort of help them out. I don't believe that, but if it's a case of really bailing out, you're going to go bankrupt, you've acted maliciously, you were careless in your risk assessments, I think you should go bust, and the economy should fix itself. It's painful. I look at what happened in crypto land. I mean, we've gone through this a couple of times, right? Every time it hurts every time when something goes bust. And I mean, we had Terra Luna go bust, right? It's based in Korea. It was a poster child for many, many, investors around the world. Individuals had tokens in it. They staked their funds in there, and, somebody attacks it, it goes down. But the amazing thing about that, there was no bailout. People tried to give it a line of credit, help it out, see what they could do, but ultimately it didn't work out and they went belly up. Okay. As a result, a lot of us lost a lot of money in crypto land, but they just had the Korea blockchain week. I think it was, 2 months ago or something, and maybe 3 months ago, 2 months ago, man, time flies. But anyway, you look at that and everybody there was still positive. They were looking for new opportunities. How can we make it back again? What do we need to do what's the next opportunity? How do I get back into building? And it was a buzz around there, right? And in Korea, where Terra Luna went bust, which was a $50 billion company, in about 2 days, right? And I think that's healthy because ultimately we've all learned, we saw the mistakes, we've optimized for that, and we've picked ourselves up to go forward again and build. And we've learned to do better due diligence, read the documents, see and understand how these companies and businesses make their money. And we've shared that in hundreds of blog posts, in open source coding that has been put up in GitHub to fix that and rectify that, with better explorers that show what the exposure is, with proof of reserve technologies that are being developed at the moment, right? From independent oracles, etc. And so I think all of those are a result that the industry wants to improve and will take necessary steps to help move forward without a bailout and without any real regulation needed before any regulation has even come in.
Yeah. One thing we didn't learn is that the government is going to come to the aid to help people when they lose on crypto trades or crypto projects go belly up. So, I mean, if you walk away with 2008 banking crisis, you learn, hey, if it gets really bad and we fuck up, well, we can always go to the government and they're going to give us a bunch of money. And it's like, yeah.
But they never help out the individuals. I mean, they haven't helped other than during COVID where we got a paycheck. I mean, the individuals don't get helped out in a bailout. It's basically the executives, the entity or the enterprise that gets bailed out. And guess who, over the whole course of misappropriation of funds or the belly up, why did that company go belly up? I mean, there's a reason for that. And 9 times out of 10, all the executives that earned big fat paychecks throughout that whole period were never held accountable.
Mm-hmm. Yeah. Yeah.
And
Yeah.
so,
I mean,
and it was,
and
yeah,
that,
you had
yeah.
money. Yeah. Anyway, yeah, your pension fund was tied up with AIG. I mean, what happens there? Do I get any money? Okay, my pension is protected. Okay, I do get it in the long run, but yeah.
Well, that's the reality of hard power. And that's what I was kind of interested in the DAO, but it's like, okay, it's all nice when people start companies and they have some structure. Like I was interested in key management. It's like, okay, it's one thing to have like a public ledger vote on what we should do, but then what happens if somebody just takes the keys and decides to just move it to their own personal account? So yeah, exactly. It's like there's almost two parallel systems. One is the actual mechanism for voting on the shares or tokens or whatever it is. And then there's the actual hard power of who has like root access to the crypto itself. And yeah, it feels like in the fiat world, that's just going to be the government.
I think in a startup world, no matter where and what type of startup, you're investing in the people. That team needs to be able to execute and deliver on a vision. And you want to invest in credible people that you can trust, that aren't going to necessarily run with your money if you've invested that. And I think you have that same issue in a fiat world as well as in a crypto world. I don't think that's different either or. The mission for us in the crypto world, especially if we're setting up as a DAO, is to get a standalone entity so that we're not needed in that entity anymore, and it's going to run in its own. And the timeline that we put ourselves forward for is to do this in 5 years. Is that realistic? Is that achievable? In some cases, it may be 6 years, but that is based on a business plan that you put together 5 years ago. And if you did it in 6 years, hands down, kudos that you did it. If you did it in 4, even better, right? But I mean, in essence, you're investing in a team that can execute on a vision, and you're buying into the vision that that team has. And that's your initial early day investment. And that's the beauty of crypto and decentralized exchanges, or maybe even standardized centralized exchanges, is that I could do a token sale right at the beginning. And people would invest as a venture capitalist into new projects. Ethereum was such, EOS was another one. I mean, Cardano, all of these projects that were now in the top tier, they didn't run away with the money. They started off centralized. They took Bitcoin as payments, and they launched specific projects. And those projects are largely still alive today. But it meant that those individuals that invested were all acting like a venture capitalist. They believed in the model. Maybe they just FOMO'd in, but then they were lucky. But there you have those as well. But I think you have that everywhere. But in essence, what happened as soon as that project listed, the price is marked up and down based on the sentiment of the investor base on an instantaneously 24/7 basis. And if you don't like what the team did, or they didn't close a deal that you thought they should have closed, you can immediately exit if there's liquidity there. Or you can buy in because you love that deal and you see the upside. And I missed out on the early private sale, but I got in at a sale earlier. And so the marking up and down of a price happens instantaneously, and anybody can become a venture capitalist in this market. And that, I think, is an interesting element. Are they experienced capitalists, venture capitalists? That is another question. But the definition of what is an experienced venture capitalist is, I think, flawed, where you have to have $1 million in your bank account. I mean,
yeah,
I don't feel that is the right assessment, but that could be changed going forward to get more responsible investment.
Yeah, and it is too. There's a Reg CF, is a SEC ruling that came out a few years ago that allows people to participate in crowdfunding campaigns. So I do think the pendulum is swinging in a direction that allows more independent, liberal freedom for making decisions. I think we get clouded with these words of like venture capitalists. It's really just decisions on what you do with your money, right? Like call it whatever you want. That's all it is.
Asset allocation, right? I mean, that's what it comes down to. How are you allocating your asset? Do you put 100% in a new startup, or do you put 2% of your wealth in a new startup, right? I mean,
and everyone does it. I mean, or you put 100% in your checking account, and that's a decision too. Um, yeah,
Yeah,
like
that's
most people
true.
are funny.
That's true.
Uh, what do you view? What's your thought on the? I'm guessing that you feel, and correct me if I'm wrong, because I want to ask you a follow up. Is that there's going to be a transition over the course of our lifetimes, maybe longer, maybe shorter, where we move from government issued money supply to a decentralized money supply. Like right now, the Federal Reserve prints money. We all use it, US dollars, the global reserve currency. There seems to be a tremendous amount of growing pressure in crypto to supersede that, where it's not managed by one individual, and thus keeping in line with like, what's the ability of the government to influence monetary supply? Well, if say Bitcoin, for instance, supersedes the US dollar and becoming the global reserve, then there's no ability. Then the government can't do anything. And I think people, as governments abuse that power by printing more and more money, then people internationally drop that as a global reserve, thus giving decentralized money more leverage. Assuming that's the trend we're on is going to happen, I would imagine that the US presents, particularly the Federal Reserve and the federal government, want to stop that, or at least slow that from happening. What's your take on the ways that tension might manifest? I mean, one obvious overt example would be the government bans crypto like they did in China, but it seems like we're kind of, that ship has sailed. How do you, I can't imagine that the Federal Reserve just says, oh, everyone's leaving US dollars, we print more money, inflation goes skyrocket, and everyone's going to Bitcoin, have fun in Bitcoin. Like they're going to probably try to stop that somehow. How do you see that manifesting?
I don't think it's going to be an easy transition. I think it's, there's a lot of power in printing money, and there is an amazingly huge installed base in traditional finance. All the assets around the world are in traditional finance. We're $1 trillion. I mean, if I look at the derivatives market alone, you're talking in quadrillions big, right? I mean, I can't even imagine how big that number is. But compared to this minuscule $1 trillion crypto base, or maybe $2 trillion now, depending on the day. But we're tiny, and the incumbents see the efficiencies that we're creating, the difficulty in terms of jurisdictions. If I have node operators around the world, Bitcoin, I believe, actually, had Bitcoin been a bit more open to innovation and really keeping down the costs of remittances, could have potentially, as one single coin, really grabbed big market share really early on in its days. And still today, it's a super strong inflation hedge. And the proof of work model is proving very difficult to navigate. There's too big an installed base, too many node operators out there, too many miners out there. How do I control those or manage? And it's all about control. And if you look, there was just a report that I think the White House had printed, which was around how can we regulate miners, especially as miners come to the US more and more. How do we give each of the states more jurisdiction into controlling what miners do because of carbon footprints, right? And so there's always another excuse in terms of how I can go after a specific entity and open the door from a legal perspective to then be able to shut them down or have a view at its books or make it difficult for their life, put more taxes on it or charge more carbon credits on it or whatever the angle might be to make it difficult at a point in time when it's needed. But I'm laying, and I'm seeing the government laying the foundations today in terms of opening the doors for levels of attack. They don't want to kill this business. There's too much innovation happening. All the future jobs are going to be created in crypto land and in this new DeFi industry, in this new NFT industry. The whole entertainment industry is going to have royalty payments because of NFTs, right? On an ongoing basis. The education markets, the books, all the books that are sold in schools. How do I leverage NFTs as a means to share and get a royalty in the secondhand trading of those books, right? Etc. Right. And so I think there's a whole new set of model. They don't want to shut that down, but they want the ability to say who's a bad actor, and I want to be able to close down on that bad actor and go after them based on, on whatever the rule might be. And it can be extremely arbitrary. I don't like you, right? It's like,
Yeah.
right?
Well,
Yeah,
that's the danger, right? Is like,
exactly.
what is it based on? It's based on whatever they want it to be based on. And I think you brought up a really good point about the leverage point, the wedge being climate change. Like anything related to climate change is going to be a free ticket for the government to say, we're going to
Yep.
take this extreme action, tax Bitcoin miners an additional 30, 40, 50% because of the energy consumption. I, I could certainly see them doing that if that was the initiative, if they viewed it as a threat to the US dollar in a real significant way.
Three things they care about: tax income, they care about printing money, because ultimately there's a lot of power in printing money, and then what you just mentioned.
Mm. And from Truflation's perspective, what motivates you? Do you view putting this inflation and monetary statistics and data on chain? What do you hope to accomplish, and what sort of drives you to do this?
So, I mean, a couple of things. When we looked at this a while back, we saw how archaic it is, right? It was built, the framework to calculate inflation was developed in nearly a century ago, 100 years ago. So before we even had electricity in every household, right? Then the way in which it is captured today is also still very old. We have panels, you have people 477 people going to the store and actually calculating what the price of an item is on the grocery shelves, on the shelves in the grocery stores. You have all of that out there. And then you have the same entity curating the numbers so that they can be published to give the regulators and the executive running the country a scorecard. So it ultimately has become their scorecard. And so it has been 2% inflation is a good scorecard. 8%, 10%, that's a really bad scorecard, right? And it's come to a point where I can't curate this anymore to keep this lower, because people at the gas pump are realizing that actually it's a lot more expensive than 5%, 6%. I mean, gas has gone up X, Y, Z. And so when I looked at that, I felt we need to, number one, take a modern developer approach to aggregating data and doing it faster. So not 60 days later, but actually on a daily basis. How can we do that? And how do we pull that together? And ultimately, it's providing an alternative source of what really is inflation. So true inflation. Mm. And then how do we also provide an independent body that's doing a scorecard on the performance of an economy? And yeah, I think that's really the idea.
And do you view the potential revenue model as coming from government budgeting, government funding towards researching and I mean, I'm sure they spend, I don't know how much money. I imagine it's way too much on getting these figures. Is that what you sort of view? Like there'll be some licensing fee that state or federal governments will pay?
That could be an angle. I mean, we've talked about that, obviously. I originally thought we would have a whole set of Web3 companies building on top of this data that we make available on 6 different blockchains today. So we have some 50 companies building in various forms and various stages of development on using Truflation data. So we're excited about that. But where we're seeing the real revenue come from is definitely the Wall Streets, the fiat world that is looking to be able to predict the outcome of the inflation numbers that will be published by the Bureau of Labor Statistics in the US and in the UK as well. And so, yeah. And do we see the government at some point, the federal government or the department, coming to us and saying, how can we work together? We'd love to spend, a fraction of the cost of what we would do otherwise, and have certain elements. Maybe they need 2 or 3 different parties. We aggregate every 18 million data items that we track for price changes. We have multiple sources for each of those items as well. And we do that on a daily basis, right? That is an efficiency that I believe would give the necessary departments in the federal government the right tooling that would give them a better perspective of how the economy is performing, We've just brought online sentiment data. We've brought online precious metals and commodity pricing. So all of that is coming live right now in real time so that they can make better decisions.
And is the data sources for ultimately the inflation, is that coming through APIs from existing online trading marketplaces, or in the case of, taking groceries, for example, how would you, or how is it calculated? I'm kind of assuming maybe too much there.
Yeah, I mean, so we have multiple sources again. So there's not only one given way, but what we use to kick off, we needed big numbers quickly. How do we get that? Yeah, I mean, we chose to partner with big institutions that have and aggregate pricing information associated with items at a grocery store from the teller. So they capture based on every single SKU in a supermarket or grocery store, they then capture the price information for that SKU, and they capture that on a weekly basis. And we pull that on a weekly basis from them. We purchased that, to be honest.
Okay.
Additionally, over time, we then realized that there are APIs, there are websites out there where you can get the price information through an API. And so we've complemented that data with APIs from online e-commerce sources, right? That can be through an Amazon, through a McDonald's website, and Shopify, etc., where you actually have prices up there and you can capture them in real time, what those prices are for those products and how they then move over. I mean, yeah, food items don't change in price on a daily basis. So that's a bit easier. They change generally on a 6-monthly basis.
And how correlated if the Federal Reserve prints, $10 trillion, everything's not going to rise in price at the same speed. How correlated are different common consumer asset categories? Are they strongly correlated or surprisingly uncorrelated?
I mean, pretty uncorrelated. I mean, if you can go to app.truflation.com, and we have an open source dashboard where anybody can see the weighting in terms of what an average household expenditure looks like across multiple different categories. You can see the inflation per category, and then what items are included in that category. Over time, we go deeper and deeper and deeper, and we'll provide visualization into more and more data sets associated with that. But you can then see certain items, like in the UK, for example, you look at the utility costs, it's jumped 88% in 1 year, right? And
that's crazy.
And you contrast that to other sites and other items, food items. Okay, food item has gone around the world, has increased because of the global supply chain issues and due to COVID and the shutdown, etc. How do we make sure there's enough food supply around the world? But yeah, you definitely see very deviations. But as a percentage of your overall household expenditure, you might be spending more in transportation. I got 4 kids. I got to take them to school, soccer practice. So I'm driving every day. And then, the other partner in the household is flying everywhere, right? I got to go to this city, for that meeting. And so ultimately transportation plays a much heavier weighting on an average basis in a household. And so what does that, if the transportation price changes, that has a huge impact on a household or on the average household, and then in inflation as a whole. And then you look deeper into items like transportation. You have multiple different vehicles and moduses of transportation. You have multiple different influences that drive up the cost associated, the fuel costs, the raw material costs, the pricing, the shipping of that raw material, the manufacturing of that, the labor costs associated with the manufacturing of that, converting that raw material into a actual component that then gets bolted on into the final transportation vehicle, etc. And so we're trying to get deeper and deeper into that stack where we can then see how all of those elements lead up into influencing the price of transportation overall. And then being able to get more and more real time, because a lot of these raw materials are traded on commodities exchanges and are priced on a per minute basis every time the commodity exchanges are open for trading. And so, or even when they're not open for trading, because pre and post market prices are also published somewhere, right?
Interesting. And how much worse do you see it getting? Do you see us getting close to higher levels of inflation and coming out of it? Do you see this like possibly getting severely worse?
My view is I don't think it's worse. I think worse is when I cannot predict it. And I cannot make plans according to how it's going. If we live in an 8% inflation for the next 2 years, I don't think that's too bad, as long as it stays within an 8% range and I can deal with that, right? If it goes down to 2%, then it goes up to 8%, then I don't know. I don't know how to deal with it. Why is that happening? And we had all of this happen so quickly because of the COVID shutdown and then the reopen and everything come online. We had the Ukraine war, we had Russia sanctions, we had the China issues, all of this compounded has just created huge uncertainty that has driven that whole whack-a-mole that I cannot predict anymore. I don't know what metrics to use. And then the cost of capital changing all of a sudden. So all of a sudden my predictions, I don't know how to predict. I don't know what tools to use anymore. So the world has to come and identify what are the new tools that I need today in order to calculate what inflation could look like and what impact that will have on an economy and to the cost of capital. And based on those tools that are provided, that are modern tools, hopefully we will get to a better predictability, which allows people to make better decisions, do investments accordingly, and asset allocation, and improve the asset allocation that they need to in order to hit returns. And yeah, I think we're on a journey down that path. So 8%, if we can hold it at 8% for a period of time, I don't think that is too bad.
Yeah. So volatility is worse than necessarily the single digit number or the number that it is. Fascinating. Stefan, I could tell you think a lot about this stuff. It was really fun to have you on and talk to you in depth about your thoughts on inflation and the market and DAOs and everything else. Are you actively tweeting or writing personally anywhere you want to throw out?
Yeah, no, I mean, I tweet a lot on Twitter, srust99. We write newsletters. So sign up to our newsletter, go check out our site, truflation.com. And there's a lot of activity and this community is super engaged. It's amazing how much feedback we've received from the community around our products, what data sets we should be including. We've incorporated all of that from the feedback of the community. So we really treasure people's opinions and we try to loop it in. And that's the beauty of digital communication. I can capture what people want. I can see what the community sentiment is, and I can incorporate that in our product evolution and development in order to meet the requirements that the community is asking for. And I don't need to wait for some smoky room meeting in person, 3 months later to get the feedback. In fact, I can get it real time from everybody, and I can see from a large constituent what they're looking for and how we can improve the product.
Through things like Discord, like a public or
Discord, Telegram, the Twitter sentiment, the Twitter feedback. So you have all these different, digital channels. Newsletters is difficult because newsletters is sort of a bit more broadcasty. Blogs, sure, but I think people have lost the desire to read too much, other than paid for analysts that are actually doing this for a living. And so how do you bring it out and how do you capture the sentiment and recommendations?
Yeah.
But it's
fun project
with a hyperlink. I can link you to. It's fun.
It's super important. So I congrats on all the progress you guys have made and hope you keep crushing it.
Yeah, we will. There'll be some really interesting products coming out. We have a personal inflation calculator coming out at I think next month in November. So you can then import your expenses. You can integrate your credit card data. You can take your Expensify account and then work out what is inflation for you.
Oh, interesting. Send it over to me.
Based on your spending. Yeah, I will definitely do that.
All right, brother. Talk soon.
Thank you.